Hey everybody, welcome to Options with Hans. I'm Hans Albrecht, of course, 15 years as a pro options market maker, and then a decade after that managing up to 12 income black swan type funds, generating $750 million in options cash flow from those strategies for members, clients around the world. So wonderful time, long options, short options, I've done it all. And today I want to talk to you about something that we're seeing some interesting things in the market right now. Before that, of course, we are going to talk about how this is your trade and your responsibility. And of course, if you're okay with that, continue to watch. If you're not okay with that, then we'll see you next time. But today we're going to talk about something very interesting. We've had a big pullback in those beta plays, right? Those high beta plays. What does beta mean? It means the sort of the reaction of a particular stock to a broader index. So a high beta means it's going to move more than the index, both up and down, and a lower beta than the index is going to be something that moves around less, right? A little bit more steady eddy kind of thing. Now, I think a lot of things are generally not that low beta. We've seen even kind of safety areas getting very expensive, having big moves. So this has really been a year of kind of amazing moves up and down and parabolas all over the place, really, in high quality names as well as very speculative names. So this is a different regime, but we can see here what happened. And I talked about this on my show with Samantha a few weeks ago. This is 12 days ago. And I said, I have moved to 35% cash from 130% invested. So in all kinds of high beta stuff, some of the mag as well, some steadier things, moved into broadening, moved into mag. My two favorites have been Apple and Google. If you're in the community, if you've been watching me, those have been my two favorites. Those are actually up since this calamity sort of started. I have a little bit of Meta. And also I've been moving into some of the fixed income plays, like some of the ETFs that have exposure to high quality corporate bonds. So I really want my bonds to be very, very high quality. So I want to position in the mags, in the very, very big cap names that have just tons of money that are never going to have an issue as far as I can see. So those are the ones I think that are going to be more and more important over time. For now, if we start to see this roaring 20s scenario, I think, generally a lot of that stuff is going to do okay. But for me, I want to slowly be shifting more and more into those super, super high quality. I do think rates are going to come down. And so the idea is that, listen, I said, I'm out of high beta for the most part. I've got some Figma, I've got some Snow. I said, moved into data as well. So data is not low, low beta kind of stuff, but I want to move into the areas that I think are very, very solid from a narrative standpoint. I absolutely, no question, know that companies are going to need to figure out AI, figure out how to make sense of their silos of data. And there are certain companies like the Snows, the Palantirs, the Datadogs that are going to be integral to that, right? So it doesn't mean that those stocks are necessarily going to go straight up. They are going to be somewhat beholden to what the overall market does. But these, I want to be in exceptionally strong stories. So a little bit of data as well. But you can see here, look at the outperformance of Russell 2000 companies with negative earnings versus 2000 with positive earnings. Look at this. This is really a mania playing out right in front of us. And I talked about this, didn't I? I talked about this months ago. I showed you the inverted call skew just starting to get going. What does that mean? That means the upside calls start to get priced more aggressively than the out of the money puts. And so we were just starting to see that. We saw something like that in 2021 and then going back to previous manias, but we started to see that. And I said, there is plenty of room. And I was showing you my breakout ratio chart, which was looking at ARK versus big cap tech. And it was starting to make those moves. So where else can you see that? What else gave me pause 12 days ago? I was getting out over the previous week or two, but pulling out of these things because I started to see some very weird things in options markets, which you almost never see. Very rare. You see moves like this in longer term option pricing. You see that typically in front month, going into earnings, when something crazy is happening. That's not atypical. But when you see longer term options start to price in what really is, in some ways, is fair, because we're going into a world where there's going to be disruption and uncertainty on a level that we maybe haven't seen in many, many years. There are going to be lots of positives. I think profit margins improve for people who figure this out. But there are also going to be big companies that kind of go the way of Kodak, perhaps, over the next 5 or 10 years. So and really struggle. So I think option pricing has to recognize that, and I think it's starting to do that. But we can see big moves, and not just in this is Nebius, this is 𝐽𝐾, where we've had a really big move, and we've seen Micron's had a very, very big move. which is one of my favorite names. I'm dipping in today and picking up a bit of Micron. Is one of my favorite semiconductors. But look, even in Amazon, big moves. So big cap, small cap, medium cap, this is happening everywhere. And this is a sign of uncertainty, good and bad. And I think that's something. And then we also saw parabolic retail option flows, like literally boom, which I showed on my shows. And I said, this is getting a little bit excited, a little bit too excited. So this is how you read the tea leaves. And if you are in my programs, if you watch me, you'll know I have gone to heavy cash. So a lot of my members are saying, hey, that's really great. Tell us when to start picking away. So we're starting to look at certain things today. I picked up a little Nebius, which I think is a real story. I'm not big on like an Oklo and SMR just yet. So anyway, let's get back to the topic du jour, which is basically, I think there's some interesting. So I talked about months ago, maybe 5 months ago, I said, I think software is in trouble. So I wrote down some shorts in Fiverr, in Upwork, a number of other areas. And then eventually I changed my tune. I said, no, I think this is going to work well for a Fiverr and Upwork because of some other things. Those are sort of platforms, not so much software. But I said Adobe, Salesforce, and they just went down, 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 down. So I had a big presentation where I said, I'm short these things. Sure enough, they went down. Now I've changed my mind over the last month. So if you've been in the community, you know I've been talking about this, how I think this isn't going to be as simple as putting ChatGPT on the job and suddenly doing what Salesforce does. I said, that's just not realistic, right? Salesforce requires trust. It has an incredible ecosystem. It's ingrained in the processes, in the sort of flow of processes in companies. It's very difficult to get rid of that. And you just aren't going to replace it overnight. And this is something, this is fascinating. So what we had was, and this is going back a little bit, CEO Benioff said he cut 4,000 support roles because of AI, right? So people see that and they say, well, jobs are being threatened by AI. And they are, but we're going to see in a moment, there's certain kinds of jobs. So look at this. What he did say was, and I noted this at the time, and I said, this is very interesting. Salesforce has seen benefits from using its AI tools. Benioff said on the podcast, in the last 26 years, he said the company had more than 100 million leads that they couldn't respond to because they didn't have enough workers. But now the company's salespeople are able to respond to more customers with the help of AI. So cutting some of those areas that have the repetitive automation potential type tasks. And watch this. This just happened. Mark Benioff said AI won't replace sales. They are hiring thousands of people. So they've announced they're going to hire 5,000 people. They're going to work their account executive Salesforce up to about 20,000 people. And they have now done, what have they done? They've integrated AI into it. What can the AI do making that initial connection? Those initial connections that give them good leads, they can have AI do that 24/7. There's no limitation in terms of a Salesforce that can do that for you because AI can do that in a much bigger way. So think about the implication of something like that. It's proof that the future isn't necessarily one that involves massive firings, right? So now these chats can handle these, support chats. And in fact, the savings in certain areas are going to allow you to add people in other areas that are going to add more value, right? So the jobs are being reshuffled. A great example of how AI is collaborative in a way. That's not great for those initial people who are let go. They're going to have to retool and kind of figure things out. But I think this is fascinating because there's a very good chance that this sort of repetitive outreach that creates more connections and then leads to the relationship part of it, right? He says AI doesn't have a soul. Maybe one day it will. Maybe in a few years, you won't be able to distinguish the difference. But for now, he wants those relationships to be cultivated. It's probably a bit unique to CRM as well. You want to have that relationship, account executive relationship, right? People like that. They get freebies, they get perks, they get tickets, they get this. That's still a part of it, right? So, but this is going to very much indicate something that could very well be happening. Now, is AI a threat to a software where you have sort of a repetitive, accounting type calculation or creating a PDF or a PowerPoint or some sort of presentation? Yeah, there's going to be AI that takes over things like that, and there's no going back. But with something like this, I think this is a fascinating view of how things may unfold, as well as gives us an opportunity in Salesforce, in my opinion, because I do not think it's doom and gloom. I think AI is going to make these guys more money, and this is really part of the beauty of the infant stage of AI as it moves into all areas of the economy, little companies, big companies, one and all, to start to add value, and hopefully we continue to see jobs reshuffled in this sort of environment. So let's take a look here. Okay, so the thing is, we have very, very high option prices right now. So we've sort of come into an environment of, you know, big time pricing. We've seen a big pullback in some of these stocks. Sometimes you're going to see option pricing actually start to relax now that we've found some levels, we've pulled back. The vol market might just sort of say, well, okay, fine. We've found something. We're no longer going parabolic. We could probably continue to move around. But Salesforce is what I'm kind of looking at, again, as we sort of talked about a little bit earlier. And I think it's a very interesting play here. And if I look at the pricing, it's expensive, but it has been coming down. So what I like about that is that we aren't necessarily seeing rock bottom pricing, but I don't think that's really realistic anymore. So we've come back down towards that mid 30s range, and really 31, 32 is just too cheap. So I don't think this is actually unreasonable at this point. So what I am looking at doing here is looking at something like, you could go out to the August, which is going to give you lots of extra time. We weren't looking at that particular expiry just now, but just in a general sense, I think it's kind of an interesting play. If you believe in this sort of comeback theory that these guys could actually even do better with AI and stave off competitors, because I mean, they're an ecosystem, right? They're an ecosystem. They're very difficult to replace that. There's a lot of trust involved. There's a lot of personnel involved in relationships. It's just not realistic to replace all that. So I think it persists as something that has potential. All companies are going to go through this transition period, but they are, without a doubt, they are focusing on AI and how it helps them. And I like that. So I think you could get in here and buy like a 280, maybe an August 2026 280 for about 29. You probably get filled there about 29. You could also do a kind of an in the money play, maybe do like a 220 for about 59, 58.75, probably around there. The spreads are not that great, but this is not something you're going to just sort of flip out in a couple days. So you're going to hold on to this. And really, even though there's a little bit of Vega risk, right? The option pricing can come down a little bit. I don't think it can come down that much. So I don't, for me, I don't think the Vega risk is exceptionally high, but that is still there as we go into the Christmas months, and as we rally, we'll probably see some of these vols get compressed a little bit. So this is a name I like, and those are a couple of trades you could do. And for an income trade, you could probably get away with something like I did some of these, a 240, 220, or maybe even like a 230. That's getting a little bit cheap. You know, maybe like a 245, 230, you get a few bucks for that. That could be sort of a more incomey type trade that's taking advantage of still a little bit elevated option pricing in the short end of the curve, and gets you that nice theta, a little bit of Vega exposure too. So if it comes down, you make a little bit of money. So those are a couple plays that I'm looking at here. I'm favoring just a little bit more of the longer term play because I don't know how long this sort of market malaise can last. And so I want to have time on my side, which of course is always one of the advantages to the Leap strategy. So check us out, Leap Trader. We're really having a lot of fun. We've gotten out of tons of positions before this market swoon, and moved into quite a bit of mag plays and interesting plays. I still like the data plays. And frankly, I've been chipping away at Nebius today because I think that is one name, that big giant Microsoft deal. I think I want to attach myself to names that really have good stories associated with a good story, right? A story within a story makes sense to me. So we'll catch you guys next time.